I think we can safely say that our bull case is well over $1 million in 5 years. We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025, how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack. But I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class.
Cathie Wood has long maintained that the U.S. economy is going through what she refers to as a rolling recession, which is a slow motion decline in which aggressive rate hikes cause one sector to deteriorate after another. She cited the housing and car industries as glaring examples, pointing out that the housing markets fell by as much as 35% last year, causing crucial sectors of the economy to experience recessionary impacts. Furthermore, Wood asserts that the dangers of additional decline are still quite significant. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Well, I think it was interesting in the Fed vote today, there were 2 dissents, and we have not had 2 dissents since 1993. And I remember those because I was in the business back then as well. And I think that's very important symbolically because Chairman Powell has wanted unanimity. And so now we've had a break. And part of it is because Chairman Powell's term is up in May of next year. And maybe the 2 governors dissenting want a shot at that position. You never know. But maybe it is because the 2 governors, and I haven't gone through all of the notes yet, the 2 governors are seeing evidence of housing relapsing here and prices in many areas not responding to tariff increases, and seeing that, well, wait a minute, maybe the surprise here in the next 6 months is going to be much lower inflation. And we've had a few employment reports that they have something for everyone, some strength, some weakness. But I think what's beginning to concern a lot of people is that the unemployment rate for new college graduates is going up. And that's because entry-level positions are being subsumed in many cases by automation, especially AI. And so I think they're looking at this as a potential concern out there. We have been saying for quite some time that the economy has been in a rolling recession. When the Fed jacked rates up 22-fold in little more than a year's time, one sector after another began to give way, starting with housing. Housing, by many measures, is down 35% still from the peak. And we're seeing some metrics take another step function down. So I think that has some people concerned. I think the housing inflation numbers are going to come down. They're already, the monthly numbers that we get from various sources are showing declines. Year over year, they're not declining, except for maybe median existing home sales. But we do think that one of the solutions to the affordability crisis, if sellers really want their homes to move, they're going to cut their prices. And because that is if interest rates don't come down. And if they do cut prices, then the big surprise in the latter part of this year is how low inflation is going to go. And there's a big lag between the time home prices fall and they get into the statistics and leave the statistics as well. So this is going to be with us for quite some time. So I think we've been saying we believe that thanks to certainty now, more certainty about tariffs, tax policy, government spending, and regulation or deregulation, that we're getting ready to move from this rolling recession into a much stronger than expected recovery. In the next, I'll say 6 to 9 months, it will become obvious. With productivity, one of the biggest surprises, it's already strong given the slow growth rates in the economy. I think year over year, it's still up above 2%. But we think it's going much higher thanks to all of the technologies around which we have centered our research. So robotics, energy storage, AI, very importantly, blockchain technology, obviously important here, and what we call multi-omic sequencing in the life science space. All of those innovations are incredibly deflationary. And the best example probably is AI. AI training costs are dropping 75% per year.
Cathie Wood is completely devoted to cryptocurrency. She remains consistent in her audacious forecast that Bitcoin, the new digital gold, and a crucial entry point for institutional investors, might rise much above $1 million in the next 5 years or so. Even with her conservative approach, Bitcoin is still comfortably above $1 million, with her base case predicting that it will reach between $700,000 and $750,000 by 2030, and her bull case pushing that figure as high as $1.5 million. In addition, Wood anticipates that institutional usage will grow quickly through Ethereum, Bitcoin, and more recently Solana. As the ecosystem develops, Layer 2 networks are probably going to follow. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Just learned from one of the founders of Tether, Paolo, that they had no idea that Tether would become an important source of dollar exposure to emerging markets until COVID, when the children of in families in emerging markets would go to their parents and say, you don't have to go into the black market today to buy dollars. We can do this on the internet. And that's how it really spread, which is fascinating, isn't it? We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025, how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack. But I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class. That and the really substitute for gold as a store of value, another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million in 5 years. So we are watching our clients and guiding them carefully into the ecosystem. Bitcoin, Ether. We do have private funds, which had a very heavy weighting in Solana relative to ETH until recently. And, we made a very good move at a good time as Ether started to outpace Solana. So those are the big three for us. And, we're watching layer twos, of course, as well. And I think you'll see us, as we're trying to educate our primary client base, go more deeply into, the big three, talking in terms that financial analysts and investors will understand, looking at returns relative to risk, calculating the Sharpe ratio, the Sortino ratio, and so forth. So I think that's what we're really doing right now in terms of from an education point of view. That paper is in process. And the other thing we're going to do, like we have done with Bitcoin. So we put out something called Bitcoin Monthly. It's probably going to be Bitcoin bi-monthly, and we're going to layer into the alternative months Ether, Solana, and then the longer tail. So, and what this does is analyze on-chain or look at and evaluate on-chain analytics, as again, we educate our investor base about the kinds of signaling properties that these protocols have that we don't have in equities or bonds, because the transparency just isn't there the way it is in blockchain technology. So we'll do ETH, Solana, and others as time goes on, and as they begin to show themselves as interesting, especially to institutional investors.
Cathie Wood wraps up by offering some compelling observations that bring everything together. She reminds out that today's economy is at a true turning point. The Federal Reserve's unity is beginning to erode for the first time in decades, a warning that even policymakers are beginning to diverge on the direction of the economy. According to Wood, the economy has been in a rolling recession, with aggressive interest rate hikes causing successive industries, including manufacturing, housing, and automotive, to struggle. She points out that the housing market alone is still down more than 30% from its peak, and that weakness may cause inflation to decline more quickly than most people anticipate. The unexpected outcome for the second half of the year might be significantly lower inflation rather than higher inflation if sellers begin lowering home prices in order to make sales. But in addition to seeing risks, she also sees great opportunities. Wood contends that, driven by innovation and productivity development, we are about to exit this rolling recession and enter a more robust than anticipated recovery. She identifies tremendously deflationary technologies that will propel efficiency and economic growth over the coming years, including robotics, artificial intelligence, blockchain, energy storage, and advanced biotech. For instance, the cost of training AI is reducing by approximately 75% annually, making it quite affordable. Bitcoin, however, continues to be her focal point. According to her, it is a new asset class, digital gold, and the gateway for institutional investors around the globe. She therefore sticks to her audacious price prediction, arguing that Bitcoin will soar much above $1 million in the next 5 years. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.